What's up, guys? Welcome back to DCA. So what we're going to do in today's video is take a look at the supply distribution of Bitcoin. Now, we've been using this metric all through the end of 2021, all the way through 2022, and we continue to use it because it has identified every major support and resistance level for Bitcoin since we've been looking at this metric. We have been able to identify on the site, we've called these things weeks in advance. It's very clear with this information where your support and resistance levels are going to occur at. The supply distribution is going to tell us when we're coming up on a point where we're going to run into a large number of investors holding an asset at a particular level, and therefore likely to experience at least some degree of either support or resistance at that level. So I want to talk about that today. Now, when we do this, TA, technical analysts, they may be trying to find very precise points, and that's fine. That's TA certainly has its place in an investor's toolbox. But what this does is gives us a very broad sense of where we're going to find support and resistance at. So, we don't look and say, oh, at $48,110, we're going to find resistance. What we can do is say, at this 47 up to around 48K level, we're very likely to experience a high degree of resistance there, and it's going to be difficult for the market rally to continue based on XYZ. So combining our knowledge of market dynamics in addition to on-chain data, the supply distribution in particular, we've been able to identify these levels. So I'm going to pull up a picture of a chart from right about here. So we are trading in this picture I'm going to show you. We are trading right at 38K back in here in February of 2022. Okay, so notice that we're down here. So we're looking at 40K, 50K, 60K, and 70K. And we're looking at the number of holders of Bitcoin at these individual levels. And that's up here. So we have this segregated by short-term holders and then long-term holders. In general, short-term holders are going to form a higher level of resistance for you in comparison to long-term holders. All right. So over here, same thing, 40K, 50K, 60K, 70K. Now I want you to take a look at when we were making this video. We said two major things, and one of them's highlighted on this chart right now. Okay. That's what we were saying at that moment in time when I took this screenshot. But one of the things was we said that it's very likely that if this rally continues, what we're expecting to see is that we're going to hit resistance in this zone right here. Okay. So what this zone is that I'm showing you, and I'll just block it off so that it's just very clear what I'm saying here. Right in this zone, you'll notice this is the 47, 48 up to around 49K level. We said that if we continue on a rally, it's very likely that we will hit a high degree of resistance at that zone. Okay. And that was for the fact that there are a large number of not only long-term holders. You'll see that this is up here just to give you a sense of the scale. This is 50K, 100K, 200K, 300K, 400K. Same thing, 100K, 200K. There are a large number of not only long-term holders, there were about, if we just look here, 300, 400, there's about 1 million Bitcoin being held above 45K up to around 49K. But then there's also about another 1 million or so being held right in here, right in this 47, 48 up to around 49K zone. So we said when you come to that level, it's going to be difficult in the bear market that we're experiencing. The Fed, remember at this time, the Fed is going wild, raising interest rates. The bond market is skyrocketing. The stock market is plummeting. Okay. So we are seeing all of these events play out at the same time. So we're saying to ourselves, if we rally right now, that is a very key place you need to watch as an investor for an area of resistance to occur. Now, at the same time, let's look at this area that we have highlighted right here. And what do you think we're saying about this zone? So notice that there's no short-term holders. There's none. That's why my picture is down here, right? There's no short-term holders. And why is that? Well, A short-term holder is someone who's held Bitcoin for less than 6 months. And quite frankly, at this time, we had not been below 30K in the prior 6 months. So there are no short-term holders. Short-term holders are the ones more likely to sell. All right. So what we said was, well, let's look at our long-term holders, because these are the guys that may form support for us. Long-term holders tend to be guys that form support. And this isn't my opinion. This is proven. There's lots of studies on this. You can go look up. So I'm not going to dive into all of this metric and then, dive into all the dynamics of short versus long-term holders. There's lots of research on it. You can look it up, but it's a proven fact that long-term holders tend to be areas of support much more than a short-term holder, who tend to be areas of resistance, in fact. So what we find is there were not many Bitcoin in this zone right here. In fact, just take a look. Look how few Bitcoin at that level were being held in relation to all of these other levels. At this level, you see there's very few Bitcoin, right? Right at around this level, if you just look, that's right at around this 27 or so, 27K level. Then there's maybe another 200,000 Bitcoin at around 22, 23K. But other than that, there's not much. And why is that? Why are there so few Bitcoin here? Well, think about it. 20K, or right around 20K, was the high back in 2018. And then look how long we spent at the 20K level prior to, remember, we're back in 2022 right now. We had only existed, the price had only existed in this level for mere days. We shot through that level in January, and therefore there just wasn't enough time to accumulate a huge number of Bitcoin in that zone. And much of the Bitcoin that was accumulated was sold during the bull market. So we said at this time that right here, this is our level of support, right at this level, because we have a large number of Bitcoin. We have around 250,000 Bitcoin right at around that 32K level. And so these were acquired right here back at the beginning of 2021. And then back at the end of that first collapse that we saw in May, which took us all the way down here to July, you saw some more accumulation right in that zone. But we said critically at that time, if you fall below that level, what's going to happen? And you're likely to see Bitcoin rapidly collapse all the way down to 20K. So we said from around 32K, once you lose that level, you're kind of destined to head down to at least 20K. And people were appalled by this at the time. And the reason for this is, now it's self-evident and it's very clear. Everyone just completely has no doubt in their mind that this was going to happen now. But when I was saying this back in February, people were shocked and appalled, saying we're never going below 30K because of XYZ. People were just absolutely shocked that I was saying that we could drop below 30K again, because they simply did not believe that it was possible to kind of head below this level right here that we had formed. Okay. So that level right at around that 30K level, they didn't think it was possible. And we were saying that, well, at the end of the day, the Bitcoin supply distribution is telling us that if we lose 32K, you're going down very, very, very likely. You're going down to 20K and potentially even lower. So it's just going to come down to how bad the stock market is at the time, how bad the macro data is at the time. And that will determine where we go to once we start falling. All right. And at this time, we said if things get severe enough, 12K could potentially be in the cards, because you don't really have a fair amount of support until you get down to that 12K level. Now, let's look at how it played out. So notice we said you're probably going to hit resistance at somewhere between 47 up to around 48K. And we said if you lose this 32K level right there, you're probably going to be in trouble, because that's the level, kind of the last stand level. So when we come back to the chart, then we see that sure enough, we came up and we hit 48K, just like we suspected. That one was exact. I'd never claim that this is going to be a very precise science. We're looking for a tight range. We want to know, 1K, 2K, that kind of range. Where could we potentially see the price go? So we kind of hit this 48K level, and sure enough, we collapsed right off of that level. Then we went down, we got all the way down to right at around 30K, and we held in this 30K zone. So you'll notice that we were saying if you lose 32K right around here, you're probably going to be looking at some trouble. And we fell below that level and actually started holding it as resistance. Because remember, once you fall below a support level, that level becomes a resistance level. And sure enough, we lost it like we suspected we would, and we collapsed down where? Right to 20K, right where we said the price would probably stabilize. So we stayed in that 20K zone, and you'll notice that's right in here. We stayed in that 20K zone for quite some time following that. And this isn't difficult data to analyze. It's not like, I'm sitting here claiming that I'm some savant that only I can possibly analyze this data. This is semi readily available data. That's kind of not true, actually. The data is somewhat, actually, it's quite expensive data. So that's the one problem. But, it's not difficult data to analyze if you are able to find it. And it's very accurate. And that's because it's removing the necessity to look at all these different technical analysis metrics to try and figure out, where might investors do X, Y, or Z based on X, Y, or Z events. It's just looking and saying, where are these investors at? And it's identifying them for you. It's identifying exactly where our support and where our resistance is at. So that's a long-winded way of getting back to the point. I want you to focus on this level right here, the 17K level. What happened at 17K that's unique? Well, let's relate 17K, where we have 920,000 Bitcoin. Let's relate that to this level right here, this 28.5 level. So notice there are nearly 1 million Bitcoins sitting at 17K. When we made that video back in February, we talked about this level as being critical to continue to watch because a huge number of Bitcoin were acquired at that level. And in addition to another metric that we talked about, which is the Bitcoin cost basis for long-term holders versus the Bitcoin cost basis for short-term holders. We said when the short-term holder cost basis becomes lower than that of the long-term holder, that has historically marked the crypto market as being either at or very, very close to the bottom. And we said it's going to be critical to watch this level because when we're down here at 17K, that has actually occurred. The flip has occurred where the long-term holder cost basis, so the people that all the collection of people that have been holding for what is categorized as a long-term holder, they now have a worse cost basis than someone who just bought Bitcoin yesterday. And that is an indication that you have wiped out all of the investors who are wish-washy, the guys that are going to capitulate at the first sign of weakness. Just look back to that picture we just showed here. Look at how many Bitcoin are being held at these levels now. So look, we're at 50K here. There are millions and millions of coins in the 50Ks in this picture that I'm showing you here. Compare that to the 50Ks now. There are barely any coins being held in the 50K. So I'll mark out for you here from around 60K all the way down to around 50K right there. There are few coins in this zone now. Maybe just north of 1 million. And you had millions of coins. So these people have capitulated en masse, and they continue to do so. I monitor the change in these levels every day. I started tracking this data so I could see daily shifts months ago. And in this data analysis that I've been performing, which, mind you, I also hope to have up on the website soon, we have seen these people capitulate, and they've continued to capitulate. They capitulate every time there's a price rally. They capitulate every time there's a price crash. So just any type of move in the market, you're continuing to see these people sell. Maybe justifiable, maybe not. It's all about their individual situation. I can't say what's right or wrong for them to do because it's an individual choice that, these people have to make based on their financial situation. But at the end of the day, this is why we use something like the upside down potential indicator, which is a risk metric we have on the website, or the DCA index, which I've previously given out, which is a trading view indicator. We use these type of metrics. These metrics clearly said, hey, get the heck out of the market. When we were back here in the 60Ks, they said, get out. And we've said from the beginning of time on this channel, when the market goes on a rally like this, you really need to look to get out of the market. Bitcoin goes first, which we saw. Then that money flows from Bitcoin into the altcoins, which we saw here in April and May. And we're saying, hey, get out of the market. Then we saw it again back here. Bitcoin rallied. Then you saw those altcoins go on those insane rallies in November into December. Apply common sense to what's happening here. And so that's why we use data analysis on the site, because it's really removing the emotion from the investor, where you're in a space that's capitalized, the greatest figures in this space have capitalized on human emotion. And it's a very successful business model, but it's a very unsuccessful investing strategy. So I don't care about having a successful business model. I care about making successful investors. And that's the bottom line. When I made, using a very similar analysis to this, I made a video talking about Ethereum, the likelihood that we are to head back to 1800 for Ethereum. And this video got downvoted. We were sitting at 3K at the time. And the video got downvoted to oblivion because people could not fathom that we could potentially go down to 1800. But I was saying that if this market continues bearish, it's very likely. And it's simply by looking at data that, you don't need any type of data analysis software. You don't need machine learning. You don't need a trading view script. You don't need to know programming. You're simply looking at market conditions and how they're relating to what's actually happening in the network. And you can see these levels. Let's just quickly kind of wrap this up by discussing what happened down here at 17K. Well, when that flip between the long-term holder cost basis and the short-term holder cost basis occurred, we saw that either one individual, several individuals, or many individuals came in and bought a huge number of Bitcoin right here. So you'll notice that there are more Bitcoin sitting at 17K than there are at the current zone. And that's very rare, especially when you consider that we have come up around 70% or so. Yeah, so we're up around, let's go from 17K exactly just to, yeah, we're up 65%. And I'll make it a bit bigger just so everyone can just very clearly see what we're saying here. We have come up around 65% from this level. And when we talked about this in February, there were 1.2 million Bitcoin. There have only been 300,000 Bitcoin sold from this level at that time. And that's unheard of when you see a 65% price rally. If we went on a 65% price rally from where we're at right now, so that's, 29K. If we went up to, let's see, that would put us at around 48K. I guarantee you would see this line right here evaporate. It would evaporate by the time we got to probably right here. So we speculated back here at 17K that this was an extremely important event. When you take into account that we're seeing such a large number of Bitcoin purchased here, in addition to the fact that we see the other on-chain metrics suggest that the network is ready to begin its consolidation phase, this was an extremely significant event that we took note of and we will continue to watch. So thus far, it looks extremely bullish. So I'm expecting this level to act as an area of support, because if we were to come back down, and remember that in the past, we've seen these events kind of play out where the event did occur where the market, someone stepped in and bought a huge number of Bitcoin. And we have come down and tested that level again. We've seen it in the prior 2 cycles, in fact. But it sort of either held support or, we only went a bit below that level and then we were ready to go. So I'm not going to sit here and tell you that we can't come back down to this level, but it is suggestive of the fact that at least, one or several large players believed that this was a significant and advantageous place to acquire Bitcoin. So that's what we're looking at below us. Now, in that last video, we also talked about the fact that we are expecting notice all these orange coins here. These were not there last time we made this video. There were not many coins there. So we said, you're probably going to see, the video was probably made somewhere around here. We're probably going to see ourselves shoot up through the 20Ks. I don't expect us to sit in the low to mid 20Ks for very long. And that's for the same reason that we talked about back here, right? Back in May of 22. We said you're probably not going to sit in the mid to high 20Ks for very long. And that's because there was no floor below us. That support floor was very weak. Well, in this case, that resistance was very weak. So we suggested that low 30s, that 30 to 31, 32, that might be the zone where you kind of hit resistance in this case. But we ended up hitting it a bit earlier than I thought. We hit it right at around, that 29K level. So we hit that 29K resistance level because it quite frankly, it is an important technical level. We held this level as support multiple times back in January, then again in June and July, and then all through June of 22. So this is June and July of 21, and then all of June 22 until we broke below. And now we're kind of finding that, sure, that's a area of resistance. So, with regards to that one, I probably could have done a bit better there and suggested that even though there may not be a large Bitcoin supply right at that 29K level, 28K, there is some. And in addition to the fact that, this is a relatively important technical level. So for that, I kind of slightly missed the mark by about a 1 to 2K. But like I said, that's neither, as far as my analysis goes, that's neither here nor there. I'm not trying to nail the specific number. So sure enough, we're here. Now, what happens if we break above this level? Well, we've discussed this in the past. This 30, 31, 32, there are a few coins sitting in that zone. And then once you start to break out, it's not until you get up to around 40K that you run into a large amount of resistance again. So we're talking like right in there, right in that zone is where you start to get resistance. And, if you just want to go by TA, sure, there's all sorts of levels you could look at, like probably 38K may end up being another important level because it's kind of the same thing. So I don't know if you're that concerned with specific levels, maybe 38K level, but if the market gets bullish, we could very easily see ourselves shoot right through the 30s, just like we saw with the 20s. Now, I will say if we're still in this kind of news cycle where everything's bearish every day, where the dominant news is de-dollarization, people are talking about, constantly talking about recession, that sort of thing. If we're still in a phase like that, you could get more fierce resistance all through the 30s. And in fact, if we stay in a prolonged cycle like this, I could even see us not getting above this 29K level and needing to come back down and test some of these lower levels. Fortunately, like I said, we have accumulated a large number of coins in this zone. So all through the 20s, all through the, mid to lower 20s, and then even down to 17K where we have this huge number of Bitcoin. The important takeaway points here aren't that I'm going to sit here and try and predict what's going to happen over the next month for you. I don't care what happens over the next month. What I care about is what is the state of the network. And the state of the network tells me that we have formed a significant amount of support from the mid 20s all the way down to 17K. That is now a much more secure base than we previously had, maybe 16.5K. Above us, there's some resistance, and that's forming kind of where we're sitting at right at this price. All the way up, through the 30s, we don't see a lot of resistance necessarily until we get up to the higher end of the 30s. So these are the zones that I'm watching for. And like anything else, it all depends on market directionality. The crypto market does not control itself. It is at the whim of the larger market. Like I've said before about the top-down approach, you first have to look at how's the US economy doing? How's the global economy doing? How are those economies doing? What's happening globally? What's happening with the stock market? If one is severely faltering, then, the next is going to falter. And then what's down from the stock market? It's going to be the crypto market. So it goes like the economy, the bond market, the stock market, and then it trickles down into the much, much smaller crypto market. So thinking about these things on a much bigger picture than whatever hopium or FUD about crypto you see, I think is the best way to approach this. Think about it this way. How many times have you seen a news event in the crypto market and you've just been sure that this is the most important news you've ever heard? And it's had either absolutely no impact on the price, or it's paradoxically done the opposite of whatever the news suggests. It happens over and over and over again because the creator space of the crypto market is built on the emotion economy. We aren't emotion economy investors. We're striving here to be emotionless investors, only looking at the data and making decisions based on the data and nothing else. So with that said, guys, if you guys like this type of content, hit like and subscribe. And until next time, as usual, see ya.